Hi, this is Richard Campo from Rose Capital Partners. I'm just putting this video together to talk through some of the key considerations that you have when you're using your bonus to obtain a mortgage. So firstly, I'll look at a definition of what's acceptable and what isn't to a bank. Secondly, how that's then assessed. And then thirdly, what knock-on impact that has on how much a bank will offer you as a loan. So first point then around what's acceptable and what isn't. So any cash bonus is acceptable. So if it comes through your payslip, paid to you as cash, great. All banks love that. Very simple. If it's a bit more complicated, so for example, it's a vesting stock schedule or you have carry or anything in that sort of area that isn't purely cash related, some banks will include it, some won't. Typical dividing line will be high street banks just include cash, and private banks or more complex lenders will include those other aspects. So really at the very beginning that drives the path that we go down, dependent on how much you want to borrow. But let's look at then how that's assessed. So let's say your bonus is paid monthly or quarterly. So again, if that comes through your pay slips or is paid regularly, then great. Most banks will include all of that, depending on having a sort of 6 or 24 month track record. So again, that depends on the bank, but if you get a nice regular track record of bonuses, most banks will include most of that income. If it's a larger annual bonus, then some banks take none of it, some take half of it, some take all of it. So again, depending on when it's paid and how it's paid, that has a huge impact on the loan amount that's offered. So just to sort of see how that works in terms of assessment. So most banks will offer you around about 4.5 times your income. That's the market norm. Some will go as far as 5.5 times income. So that's sort of broadly where you can get to in terms of a loan amount. But then let's put that together with the assessment of what's acceptable as a bonus, because that has quite big impact as what's available. So really simple example for the sake of math. So let's say your basic salary is 100,000 and you've got an annual bonus or bonuses that come to £100,000 in the same year. So you've got a £200,000 income. So in that first instance, and let's use the market average of 4.5 times income just for the sake of simple maths. So in the first example where banks don't take any of your bonus, they're only going to offer you a loan of say 450,000. If a bank takes half of your bonus, I believe that takes you to a loan amount of £675,000. But then if you go to a bank that includes 100% of your income, that's going to take you to 900,000. So that's such a massive difference, and you can literally double the loan size you can get if you talk to the right lender at the outset. Now, if you're after quite a modest mortgage, then it may not be a factor whatsoever. But if you're looking at pushing that because you want to move or you just want to sort of really max out the leverage, then it really, really is key we start talking to the right bank at the outset, because it has such a big impact. So that's really it in terms of bonuses. Things that are relevant will be things like track record, which I touched on briefly. The longer the track record, the better. So let's say, for example, if they're very consistent, banks are quite inclined to use 100% of that income, and particularly if it's on an upward trajectory. The other thing to note as well is if you have maybe like a bonus, no bonus, bonus, that type of setup, a bank might be reticent to use the most recent year, or they might use an average. So again, it's not quite as simple as the example I gave you. It does depend on the amounts and when they're paid, but that really is sort of the key things you need to think about and the impact it has when you come to get a mortgage.